Hello everyone, today is Friday, November 13th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time catching one of these videos, welcome to our channel. Welcome to this series. We break our analysis up into two parts. In part one, we're going to review everything that went on this week in markets. We're going to look at performance sectors, internals, volatility, and really sort of point out everything that stands out and looks interesting. And then in part two, we're going to jump into the charts. We're going to put everything from the first part into context. We're going to look at longer term trends, make some sense of everything, and help sort of position ourselves for opportunities looking ahead. So hopefully that sounds good to you. Let's dive into this week's market. We've got a few top level headlines, takeaways. The first is just the vaccine excitement, which we basically got over the weekend last week, which prompted this big gap up in markets on Monday of this week. So Pfizer phase 3 excitement there. Good news that maybe things are ahead of schedule or getting to what we want to see into a vaccine and just getting it to market. We had the S&P 500 closing at all-time highs. That happened this Friday. So we closed the week strong, pretty strong, at least for the S&P 500. New all-time closing highs. Nothing bearish about that. But if we want to talk about some bear action, it's the Nasdaq, which is clearly lagging. We're going to talk a lot about that in today's video. So let's get into some of the numbers here. You can see on the week, looking at the right-hand column, it was mostly strong week, but obviously one of these things look a little bit different than everything else. It is the Nasdaq 100 down 1.27%, the Dow Jones up 4%, S&P up 2.3%, Russell 2000 up 6.36%, and international stocks up very strongly there, 3% as well. So we'd like to say it was pretty broad-based minus some of the Nasdaq. And basically, the thinking here, or the narrative anyway, that's being floated is, off the heels of this vaccine, we have this sort of reopening trade that is happening, or rotation that is happening right now. So basically the work from home sort of Nasdaq technology heavy index can sort of be sold off as the market sort of attempts to price in a reopening. And so the things that have been beaten up the most are the things that rallied this week. That's at least the narrative. We're obviously going to suss that out through some of the numbers here and charts a little bit later. If we look at market internals, very strong week in terms of net number of 52-week highs, 482 on the week. That's a pretty strong number for this year, and it mostly comes from Monday, though. So 333. Then you see the taper that occurred Tuesday, Wednesday, Thursday, Friday. So what we basically want to see was Monday just this one-shot event where we had this big uptick, but it was some type of blow-off, or can we get back up into triple-digit numbers? That's what we want to see. We don't like these. I mean, the double digits are fine. We'll take them, right? If we're bulls here, we'll take the double digits, but we really want to get into consistently triple-digit days here for a number of 52-week highs being made each day. Last row here, percentage of S&P stocks above a 20-period SMA, up at 85% going into the weekend, so a pretty frothy sort of extended number for that reading. If we go to one of my favorite charts here is the 30-day look back of cumulative NYSE 52-week highs minus the lows. Basically looking, if you're a bullish on the market, you want to see an uptrend, and we do have that. We have a chart that starts in the bottom left, rallies up to the upper right. We've got a couple of plateaus in here. We're a little bit of a plateau as well over the past 5 days. So we basically want to continue to monitor this chart. As long as we're heading up, as long as we're flat to up, that is a healthy market. If we start declining, if we start pulling back and enter a downtrend here, that would be cause for concern in my book. Now, if we go to sector performance here, you can see it was a mostly unanimously green week. It was only tech on the downside that closed in the red here. Speaking of the downside, I mean the relative underperformers, communication services, consumer discretionary, and technology. So those were all relative underperformers, 2 out of 3 green. Tech was the only red. On the upside here, again, it's that reopening or just the beaten up areas that we've seen this year. 17% pop there for energy, 8% for financials, industrials up 5%. I mean, take a look at this 1 year number here. So you can see, again, just deep red here for energy, down 38% over the past year, and that's even after this 17% week rally. So again, you can see some of the most beaten up areas, financials still down 7% over the past year, but they were the biggest beneficiaries this week. If we go into volatility term structures, this is a much healthier term structure here. We haven't seen this in some time. We're actually back to sort of normal, healthy kind of levels here. Previously, prior to elections and everything else, we had this big backwardation in place where we started up here and then we it was totally just like sideways, and it was just really sort of gnarly looking and not normal. So this is a much healthier term structure here. You can see the VIX closing at 23, which is a very low level for 2020 anyway, still historically elevated, but for this year, it's actually quite low, and it is kind of heading up in the right direction as you go out in time. If we look at interest rates and credit this week, we basically had yields popping, so that means bond prices, bond proxies like the TLT declined on the week. We did have investment grade bonds down on the week. We had high yield up, so kind of a mixed picture there in terms of credit. Not a huge warning sign, but a little bit of a mixed picture. If we look at dollar and commodities, we saw the dollar basically strengthen a bit this week. We saw gold and silver fall, and we saw some of the other agriculture ETF here close up. Crude oil was up, natural gas was up, so kind of a mixed picture in terms of commodities in general, but it was in the face of a dollar that strengthened. So if we put it all together, look at our report card. We got 3 out of 5 in the green here. Volatility environment, again, it's good in the sense of it's as good as it's gotten for 2020. But again, if we're modeling this against long-term averages, a 23 VIX is still, something 2 years ago, if you said, hey, the market's at a 23 VIX, you'd think, oh, wow, something must be going on, and obviously there is, but it wouldn't be, a healthy environment in your eyes. So we still got that in the penalty box. In the credit market, again, it was very, very weakly, just a slight ding against it. I don't think it's a huge concern, but for our model there, we'll give it a B in terms of overall report card. Now, in terms of our Merlin investment strategy here, in terms of its exposure, basically still pretty invested in this market. One notable thing, which you really aren't going to pick up here, it hasn't really been adding a whole lot of new exposure. In fact, it's been kind of sidelined here. So I think it's interesting that it's still kind of making up its mind a little bit on this market. It's not getting more aggressive in some of these dips that we saw this week. It's kind of just holding steady. This is the exposure. It's still pretty tech heavy and biotech, but there are some other things. You got utilities, got some defensive in there and some finance. So there is, some diversity in that portfolio, and it is still, kind of positioned along this market. So that's it. That is it for part 1. We'll be back in just a moment here with some. All right, we're back here. We've got part 2 going on with TC2000. This is our equity market grid. So we're looking at S&P in the top left, Nasdaq top right, Russell bottom left, and this is ACWX. This is international stocks minus the United States in the bottom right. Price itself is the white dashed lines you see on all these charts. Our custom smart trend filter measures price and volume and helps us determine trend and trend strength are the colored dots you see on all of these charts. You can learn more and download that indicator for TC2000 at the link appearing in the top right now. So if we look here at the weekly time frame, a couple of things to point out. First is we didn't get an all clear signal here in the S&P 500, in the Nasdaq, in ACWX this week. I think that's, semi-interesting there. The fact that even despite the fact that we got new closing highs and we got a lot of excitement and positive news this week, we didn't fully get here, at least in our trend model. If we hold up next week, if we continue to hold on to this rally, then I suspect we will turn up. Again, the way we like to read these indicators here is that even though it's in the neutral state right now for the S&P 500, we still give the benefit of the doubt to the prior directional reading, which is the bulls in this case, which is higher prices. So basically our read here is that benefit of the doubt goes to bulls, but there are some mixed signals. The only index that has gone positive here, in fact, it didn't really ever go neutral in these past several weeks like the Nasdaq and S&P did. This has been in a buy signal since the 9th, since October the 9th. So this has stayed in the buy signal here, and this goes to speak to the strength here in the Russell 2000. So that is the weekly time frame. If we go down to the daily chart, on all of these instruments here, you basically have green bullish uptrends, buy signals across the board. For the S&P 500, that occurred back on Thursday. So, if you're trading this model here, if you're looking at this as a buy signal, then, you would have enjoyed this week's rally here. Same thing with the Russell. The Nasdaq's been the most under pressure here, or at least the most, kind of mixed. It did produce a buy signal on Friday here, so that's good news for Nasdaq bulls. And ACWX here has been bullish all week. So that's our top level trend filter model there on multiple time frames. That's an easy way, just to get the gauge, the opinion, the stance on the market for us. Now, to drill down a little bit drill down a little bit more precise, we're going to look at some candlestick analysis here. We're going to look at the S&P 500. We're going to go down to the daily chart here, and this is sort of the roadmap we've been looking at, and we got a couple of things to sort of point out. So the first is we've come a pretty fast, sharp way here from the lows right prior to elections to where we are right now. We basically had an 11% move from, call it 3,250 up to nearly 3,600. You can see the big excitement gap that occurred here on Monday of this week. We talked about this day being this very loud outside reversal day on Tuesday. Basically said, look, we got to start getting back over a new closing high was essentially what we were looking for. A new all-time closing high, take out the open of this day here and start getting back over this level to repair, to continue momentum in this uptrend, to make sure that this loud outside reversal day didn't start to dictate the trend lower. And so far, throughout this week, the verdict is basically in that the buyers have regained control. We did close back over 3580. We closed at new all-time highs for the S&P 500. That is objectively bullish for this market. You can also see that momentum is leading higher here. So for the S&P 500, there's a lot to like right now in terms of getting back up here into the end of the week. We didn't obviously get all the way back up to the highs of Monday, but we at least got back up and closed at new all-time closing highs going into the weekend. So I think that is objectively positive. And I would say going forward, what we basically want to see happen now is ideally we stay above 3580. I mean, if we continue to stay above closing highs here, that's in the pivot high from September, then that's obviously the most bullish. But if we want to give it a little bit more room, if we want to just be a little more cushioned in our analysis here, you could say we basically want to see us hold above Thursday's lows and Tuesday's lows, which comes in around, you call it 3,500, 3,515 or so, but this would be the upper level you want to see this market hold above if you want to give it a little bit more room. So that's the S&P 500. That's the read there. I think there's constructive action. If we look at the Russell 2000, again, I think you got to be pretty constructive here, given the fact that it closed at all-time highs. So it took out and closed on Friday above the 2018 all-time high there, took out the 2019 high as well, of course. So this here also getting back towards the highs here into the end of the week is constructive. The fact that, again, momentum is leading here, MACD is rising, and making new recent highs. That is constructive for the Russell 2000. We didn't come back in and fill this gap, but if we want to look at a way to measure risk going forward, then it's about this 170 to 169 area, basically Thursday's lows. Staying above here, staying above 170 is where you want to see this market persist going forward to keep that momentum and uptrend intact here looking ahead. Now, Nasdaq 100 tells a different story here, and this is where things get a little bit more pessimistic. So obviously, we talked about the fact that the trend models here for Nasdaq turned bullish on Friday. That's good. The fact that the weekly chart is still, neutral to bullish, that's good. But again, if we want to be specific now, if we want to get a little bit tighter in our analysis, on the Nasdaq, we're going to look at price action here. And the way we're going to measure this price action is we're going to look at this view here and the fact that the Nasdaq is not breaking out to new highs. So unlike the S&P 500, unlike the Russell, and I think the Dow as well, those are making highs. Nasdaq is not. So you can see that the outside bearish engulfing bar that got put in on Monday of this week is still arguably in control here. So the high volume session that we saw, we did manage to claw back here into the end of the week, but we didn't get back over 296. We didn't get back above, even 295 or so to reclaim the majority of this. So we still have a slight issue here with the Nasdaq. And the reason it is pretty significant because it is only just one index, right? So sometimes, when it's just the Russell that has classically been lagging and the Nasdaq and the S&P is doing fine, then, we kind of chalk it up to, look, the majority of the market's acting well, so we should continue to, expect higher prices. The Nasdaq is just such a heavy weight now. They just represent such a market cap on these stocks, on the general indices, is that if you don't have the Nasdaq, kind of participating, it's just a tougher road to get a lot of these other market stock sectors working. So on a relative basis, again, you can easily have winners in some of these other areas of the market, but if tech is stubbornly kind of staying heavy, then we do have some concern there. So that's the other side. That's the other angle here, is just that to get really excited on this market, to really put more confidence in this market, you want to see the Nasdaq getting back over 296, 297, really, 298, 300, and start breaking out like the rest of the market. Maybe it just needs time, right? It doesn't have to be this, epic meltdown or anything like that. It could just be a sideways market. It just needs some time to catch up. And, quite frankly, that's perfectly healthy. So, there's two sides to read on it, and obviously kind of depends on where you sit. I do think that this controlling bar is still making this pessimistic here. So until we can get back up and retrace more, get back over this area, I think you got to be a little bit cautious. There's also this potential sort of like measured move that you could see sort of take place here. You basically got your kind of leg one there, and if you draw some type of impulse leg down for like a leg two lower, you basically get this kind of exact gap fill, coincidental gap fill that would come in here from the 4th of November. So, if we fail here right out of the gate next week and we start heading lower, you could see just this next move lower back into this range, fill the gap. And, maybe that's just, again, the reset that the Nasdaq needs. So that's what I'd be looking at there. And if we want to sort of cheat ahead, if I want to talk about kind of the bear side of this market, it's the Nasdaq, and then I'd say the VIX. Again, time frame matters here, so it's just you have to be very cognizant of time frame. And the reason I'd say that the VIX here is sort of bearish in the short term is just how much we've fallen here from the 40 VIX, right? All the fear in the market here going into elections and uncertainty and doomsday scenarios. Well, those things didn't really happen. So basically, you know, all the hedges came off, or the fear came out, the market ended up popping, and now we're back down to around 23 or so in a very short amount of time. So suddenly you really don't have a whole lot of fear in this market right now. This is where, you know, again, if you want to be very contrarian, you want to look at a VIX that is kind of sold off in a straight line. You want to look at the leading Nasdaq, which is looking a little bit pessimistic here. Then you have some ingredients to be tactical, to be nimble on the short side. But again, it's a very short-term time frame at this point. It's near-term action, and it's a hard road. Basically, is if you're going to go, you know, essentially trying to short the market here. It's just in a hard spot. There's bullish, you know, there's bull signs, there's bear signs. So you got to be nimble, advanced, tactical if you're going to be doing that. So that's the spiel. That's sort of the high level across all these markets. And hopefully that was helpful. Let's look at some other credit markets here. We can look at LQD, which again was down a bit on the week. J&K was up a little bit. You can see a whole lot more to say about him. You can see LQD is trying to stabilize and get back to bullish. High yield is working right now, which is, you know, arguably pretty important to see that's continuing to work to the upside. VIX here in a sell signal, kind of trailing off. And if we look at TLT, you can see this is still, you know, just really struggling. On the week, TLT was down 0.78%. It did rebound a little bit in Thursday, so that was encouraging to see, but basically you still have a downtrend here in TLT. And again, that's just sticking and persisting. So, you know, let's keep an eye on that. And arguably, you know, that does sort of give some support to equity markets with TLT kind of selling off and risk being front and center in demand. If we go to commodities next and we go to the daily chart here, you can see gold still in the penalty box. Silver looking a little more optimistic, trying to get back over our smart trend filter. The last buy signal was on the 6th. So it's trying to get back over there. Gold is basically on a recent sell signal, which has now gone neutral. So jury's still sort of out on these names, but basically have been going nowhere for a while. Bottom left is USO, produced a buy signal early on the week, continues to, you know, had a big week and continues to act well. It gave a little bit back on Friday, but trying to get back over and move to the upside. If we go to sectors broadly here and we just take a look at all the sectors, you can basically see that, you know, on the week, there's just lots of sectors on or in transition mode right now. Look at all of the yellow dots across, you know, most of these markets here. So there's a lot of transition going on. Most of them are coming from bull signals. So again, it's a glass half full mindset is the way I would look at it. But there is a lot on transition. However, if we go down to the daily chart, every single sector is in a buy signal right now. So we have an uptrend or basically kind of confirmed buy. Oh, except for discretionary, it looks like is the only one right now that's yellow. So things are generally, you know, pretty constructive from a near-term breadth perspective or trend perspective. Longer term, you've got some more neutral positioning. So let's dive into some of the sectors now. We'll wrap up with some candlestick analysis on some of these sectors. XLE, I mean, I've talked about this, you know, extensively over the past couple of videos here, but basically I like energy. I'm a fan of energy now. It's been a while since I've said that, but basically, you know, with the big surge that we saw this week, breaking the downtrend and some of this consolidation, doing it on some very heavy volume divergences, MACD leading. I think there's a lot to like here for energy as a rotational trade. Again, in the very short term, it's obviously extended, so you got to be careful, but momentum's there, rotation's there, so I do like energy. Materials, which we've again been talking about now for some time. You get a nice little pullback here over the past few days. I think that's an opportunity. I like the fact that it's over this consolidation. It basically just checked back to it. Looks like a little kind of bull flag shaping up there. It's trading at all-time highs. I like materials. We've been talking about that one. XLRE, so this is real estate. We haven't really mentioned this one, but I do like it. The fact that it popped back up here into the end of the week. This has gone nowhere for multiple months. It's got a nice long, healthy consolidation. It's trying to resolve to the upside and break out. So I think that's constructive. I'd pay attention to it. And last but not least, XBI here on the upside. I like the fact that this is back to highs. It's been working above here, this little consolidation. I had this big move up here a couple of weeks ago, 10% push from the lows here from this 2-week pullback, and it's right back to highs. I still have a sort of indirect position here, or I guess a leveraged position nonetheless, in LABU, which is basically the 3X ETF here for XBI. We've held that for a long time. That's part of Merlin, which we picked up, I think, back on this day in here, and this consolidation is when we ended up buying that. I think it was on this day, and that's continuing to work and letting that play out. So XBI do have a horse in that race ourselves. And on the downside, XLK, again, this is kind of the Nasdaq analysis here. The fact that it's not breaking out to highs, again, it's just a mixed, tough spot here. It's not inherently, super bearish here, right? It's not making lower lows and lower highs, but it is not making highs yet, and it does have this loud outside reversal day. So for all the reasons we discussed earlier, XLK a bit in the penalty box on a relative basis, and XLY, which is discretionary, kind of similar to the Qs here. Again, it's not a inherently lower low, downtrend bearish sign here, but it is something that is underperforming on a relative basis, and I think it's at least worth pointing out. And obviously, everyone should do their homework and do what makes sense to them. We just sort of give our lens and try and present both sides and let you sort of execute on our ideas or analysis. So that's it. That is what we got for this week. Lots going on and quickly approaching, some holiday time. So hopefully this video was helpful. I'd love to know what you're watching this week, this weekend. What stood out to you? What do you think is most important? Did I miss anything? Leave a comment below. I love reading what everyone's looking at. And as always, thank you for tuning in and watching. And if you want to stay up to date with our videos, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.